We are back on a day where the markets do not really know what direction they want to head in. Crypto is giving back yesterday's gains from the fake news. We have some problems with chip stocks here in the US. Meanwhile, tensions overseas, unfortunately, things escalating there. But we'll be discussing mainly on the financial end. All of that and more today on Money Never Sleeps. Welcome back, everybody. As we get started today, hit that like button down below. Make sure to subscribe to the channel. Nothing Kevin or I say is financial advice, or if you guys who love following the market, so please do your own research before making any financial decisions. Kev, we had more data today out of BOA and Goldman. We had a consumer spending report that, people are getting excited about that headline number, but it's leading toward more volatility as far as the Fed funds rate futures go. How do you want to start today's show?
Yeah, I mean, I think the big thing for me today when I woke up was just to see what Bank of America earnings were. So we can just roll through that real quick because while it's not really important, there's a lot of data that was released with it. I think there's just a few pieces that we can go over, and I got that pulled up right now. So I'm just going to share my screen real quick, and then I'll just read you off the key data from what I am seeing here. So this is Bank of America's press earning release. Let me zoom in a little bit right here. Luckily, it's a lot easier to read than Charles Schwab, which it was yesterday, who decided to release this in 2-point font. But yeah, they made it a little bit easier here, and it's easier to see some of the bigger picture things. So I just want to point out the average deposits are down considerably from where they were last quarter. You can see that they're down $26 billion. That's a pretty good amount. That shows you that there is still some flight leaving the banking sector. We also got some other data regardless. So we saw that the average credit card, average credit card, outstanding balances is up from the prior quarter, which kind of ties into retail sales, which we'll get into in a moment. But we can see that we're up roughly a little bit over $3.5 billion in outstanding credit card balances. Not a great look. Just shows you that people are still leveraging debt, and it's outstanding. They haven't paid it back. So that's not a good thing to see. And the other thing, which you don't see on this one, was actually kind of hidden in the supplementals of Bank of America. So they released a few reports, but it was in the supplemental packet. And that is held to maturity debt securities. And you can see right here, if I zoom in a little bit, zoom in enough there, we can see that this is the unrealized losses here for this quarter. It's 131, and is this in billions or millions? Believe this is in millions. So 131, I would assume that's 131 billion.
Yep.
Billion. Yeah. I'm terrible with numbers when it comes to, so just do what they did on the other sheet. Just have 986
numbers. You'll love to see that
in billions. It's just, I don't know, too many decimal places for me. But yeah, if that's $131 billion, you can see that's unrealized losses that they have there on their balance sheet, right? And if you zoom down or scroll down a little bit here, you can see that it is significantly up from the prior quarter, which was $105 billion. So it is up a significant amount. That's what, roughly, I don't know, $30 billion or so, $26 billion, something of that magnitude. Yeah, $26 billion. So we're seeing that their losses are continuing to mount. It's not a great look. The stock I checked earlier today, it was up decent amount. It was just up, like it was in the green. I don't know how the markets have reacted since, considering there has been a bit of a pullback since we were doing some of the research earlier. Let me just pull up the chart real quick. You can see that Bank of America is up 2.26% on the day. So this market definitely is in a place where it doesn't really know how to take some of this data. I think this is bad data, 100%. I don't necessarily think that this is good for the bank long term. But if you beat expectations, then obviously the markets are going to react in a stupid way, because a lot of people would be expecting the market to go down based off bad data. But here we are. We're still in this weird part of the market where people don't know really what to do. And it just seems like being in equities is better than not being in equities for some people, because they don't want to kind of FOMO and miss out on potential gains. But I don't necessarily see those gains being long lasting at this point.
Yeah, I'm hearing more and more analysts saying that it's time to go risk on heading into the tech heavy portion of earnings season. Hey, They get paid
Good
the
luck.
big bucks, and we're on YouTube, so maybe they know what they're talking more than we do. But I'm not. I don't share that same bullish sentiment. So
Neither
it
do I.
is what it is. Let's talk about retail sales for a little bit here. Came in over expectation, 0.7% for September versus a 0.3% expected. The areas that it increased: food and beverage, motor vehicles and parts, health and personal care stores, which, paying more for just everyday things like what I'm seeing here, and then also clothing stores as well saw an increase. Decreases in things like home furnishings, electronics and appliances, and then gas stations as well. I guess with maybe price of gas going down a bit. I've noticed that over around me as well. But the increases are in stuff that people need. It's in transportation. It's in food. It's in personal items that Walgreens and shit like that. So it's like, yeah, the number went up, but when you look into it, when you see like the disposable income, people aren't buying new home furnishings. People aren't buying new electronics. That's telling me that the consumer is not in this like amazingly healthy state right now, as Janet Yellen and some of these other people who are want to make sure that they get their positions held still would make it seem to be. Like it's just not that good. And so I think that the excitement here is a little bit off base. If you look at the Fed funds futures number, I'm going to pull that up now on my end, but now we're seeing it baked in for uh, not a rate hike this year, but maybe one in January. Like now we're at 88.5% chance of a rate hike November 1st. For December, it's actually gone. We're seeing the probability increase. It's now 55% for 25 for no hike, 40% for a 25 basis point hike, and then 4.3% that we see a 50 basis point hike between the next two meetings combined. Then in January, we have a higher probability of a funds rate increase, so like 43%. So the markets really don't seem to know what the fuck to do with any of this data right now. Like markets are confused, and there's a lot of uncertainty, and that's why we're going to continue to see these high levels of volatility play out over the coming weeks as more shit happens. They're trying to digest it. Trying to play the swings on this is a really dangerous game. I've been preaching it for a while, just like trying to be ready to take on some opportunities and having that long-term perspective. So these numbers that came out today for retail sales, don't think that they're great. We hear some, and there's also this, the Fed doesn't seem very unified at the moment as far as how they want to proceed. We have some Fed presidents saying that we should be done raising rates, others saying that we need to keep going to get to that 2% number. Some want to, hold them higher for longer than others. Like we're at this really weird spot where for the last year, all the Fed officials were on the same page. This is our game plan, and some of them are starting to capitulate. And what doesn't give me the most confidence that they have a great plan in place and that they feel like what they're doing so far is the right thing.
Yeah, it's honestly, I took the data this morning with retail sales as a bad sign. Not necessarily that, consumers are spending more. I took it as consumers are spending more probably for less goods, right? I think that the price of things are going up, like once again, and I think this is something that Peter Schiff, pointed out earlier today. And again, I'm a Peter Schiff fanboy, I guess, because everything he's saying, I completely agree with. It's just like, yeah, people are spending more money for things that they can't afford, and it's not necessarily that they're getting more for their money. They're just paying more for the same shit that they used to buy. So it's a terrible sign there. I don't necessarily think that's something to get excited about. I've also seen a bunch of Fed presidents or Fed governors that have been talking recently, because now we're having a bunch of them speak this week. Powell also speaking this week, that are saying like, I don't know where the rates are going to be 3 weeks from now. That's not a great thing for them to be fucking openly saying, right? And again, that gets me, my bearish side, really excited. I'm like, zero? Are they gonna break something really soon? But no, it just seems like they're not on the same page. That's not a good sign. And even with this retail sales data, like this is not an easier battle for the Fed with this data. This is makes their job harder. Whether they're going to do anything, that remains to be seen. But I don't know, man. It's if the markets got excited about that, like obviously they bought back early losses in the day. Now they're selling off a little bit. I think there's definitely people who are starting to capitulate to the other side where people are starting to get bearish now. But then there's still a good handful that are just really excited to be in this market. So someone's going to be fucking wrong and someone's going to be dead right. So it's one of the two extremes at this point, I feel.
When we have this combination of events, retail sales going up, meanwhile, credit card delinquencies are at, their highest rates they've been in years. Interest rates are at the highest rate they've been in decades. We have more and more people, unemployment starting to slowly creep up a little bit. It's not a recipe for a good thing. Like, people are having to put more on credit cards. They're not paying off those credit cards. They're going to continue to accrue more interest on those credit cards. That's going to lead to more people declaring more bankruptcies. Like, all of these things, man, it's not great. Like, I don't know how many times we can say it's not great, but it's until people begin to believe us. But it's not great. So the macro picture is just, and that's when I hear, these guys are like, it's time to go risk on. It's time to go risk on. And I'm just like, how disconnected are you? Like, a lot of these analysts, I know they look at the numbers, but like, I feel like a lot of them are maybe disconnected from reality a bit. And so I have to wonder what the fuck they're seeing that I'm not seeing. So,
I will say
maybe
this.
you can only gouge people with price increases for so long, right? And if that's the basis for why they're bullish, maybe they're just bullish for the next 6 weeks when we're in the biggest part of earnings season. But I don't think that's a way that I would want to play this market right now.
I don't think anyone ever accused anyone on Wall Street of being smart. I think you've definitely been accused of being greedy, but never smart. And I think that's something to keep in mind here, right? I think they're saying one thing and doing another. I think it's a very dangerous place for some of these people, telling people to go risk on. Also sounds kind of like financial advice. I guess they can get away with it though, because they're on
That's
Bloomberg
something
and
that I do.
CNBC.
Yeah, I
Right?
don't do that. I don't
Yeah.
give financial advice. I just give my
No,
thoughts.
neither would I. Yeah, I tell you what I'm doing. But yeah, it's I don't necessarily think that there's too much in the world going on in the world right now that hasn't reacted necessarily. The markets haven't reacted in any way. And I think that I'm not just talking about a lot of the stuff that's happened in the Middle East, but we're seeing manufacturing in a lot of these other countries just drop like crazy. And that's not a good sign, because eventually that's going to affect the services sector. You're going to start seeing unemployment rise in other nations. And if that's the case, then, the global liquidity is going to pull into one place. And I think that's going to be the US. That's why the dollar's been so strong. Other markets, the euro's absolutely fucked with the war in Ukraine and Russia, right? They've had to foot the bill for that because they're so close to it. It's allowed the dollar to absolutely take off, and a lot of people still feel like the U.S. markets are kind of a safe haven, but that means that the U.S. is probably going to be the last stand. And then when that goes, we're going to be in a terrible place financially, in the global economy. There'd be very few places, I think, where there's going to be a lot of money money that can be made easily. But right now, saying risk on, that's like telling someone to buy Bitcoin at 69K. That's just how it seems, I think.
Yeah, maybe Michael Saylor's in these guys' ears telling them to now is
Fuck
the
that
perfect
guy.
time to risk on.
I don't respect him one bit.
All right. That is what we had for earnings. Not a good day for Goldman. They're
I didn't
continuing
see.
they're continuing to just kind of eat shit here, man. Like, they're struggling in a big way. Profitability has been going down quarter over quarter for almost 2 years now. So tough times over there. I don't think anyone's going to feel too bad for them, however. So, it is what it is. No other major news today. We have the Fed Beige Book tomorrow to give us a little bit more information in regards to what different areas are seeing around the country. Coming up on 2 weeks until the Fed meeting. So next, a week from 2 weeks from tomorrow, we'll get to hear Jay Powell again. Can't wait. It's going to be electric as always. And then, we have some more data later this week. Next week, we get data as well. So it's kind of tomorrow should be a good one with Tesla and Netflix earnings. Looking forward to seeing how those play out. But what else was on your mind today? Anything that you felt was noteworthy in the charts?
Yeah, I mean, we could just run through a few charts that I think are, important. Let's pull Bank of America just because we talked about them earlier.
I didn't bring up Nvidia. Jesus fucking Christ.
Yeah, we can look at Nvidia too. But
God. So Nvidia is getting crushed today. I just getting kicked
It
in the
was due.
plums by Biden right now, that motherfucker. After these new rules were announced to block the sale of some of their most powerful semiconductors to China, including one that was designed specifically for China. They're used for, powering AI models, and the U.S. is doing everything it can to try to limit what China has there. Just going to hurt an American company, and fuck all this shit. That's all I got to say about it. Let's get into some of these goddamn charts.
You don't think Jensen Huang was selling for the past few weeks for a reason? Motherfucker probably knew. Again, I don't know if that's true or not. That reportedly, as Cointelegraph would famously say. But yeah, what a shit response
Did
they
you
had
see
too.
what they said yesterday? The CEO
Yeah.
was like, well,
Sorry,
it's
not
people's
sorry.
fault for interpreting it that way. I'm like, what?
You fucking, I know, man.
And she was sitting there up on stage with Mario, that sleaze bag. Like, that made too much sense to me. But okay, let's get through these charts.
Yeah, definitely. Let's pull up Bank of America just because big day for them. Obviously, they're a chart that we looked at with House when you were gone. You can see that today they're up 2.63%. Kind of going to hit this 50 moving average right here on the daily. You can see that we kind of got close to it, but then we wicked down. We're extremely overbought on the daily, right? I think there's a lot more room for the downside. And the fact that it's not pushing up higher than probably this high that we got here, it's around $29, tells me that it's probably going to get rejected off of this at some point. Not a good sign. There's a gap down here that needs to be filled as well. So I think that seeing, Bank of America somewhere between, in the $26.30, $26.58 coming back down here, it's very likely. Again, especially with how overbought the daily stochastic RSI is. But I was shorting this one a while back, and I was telling you guys that I do have my bank is Bank of America, right? We got the death cross here, but there is definitely something. If we got to go to the monthly because it's historical. It's a really wild chart, right? We got a 3-wave move to the downside that's spanning from roughly 2006 all the way to wherever this bottoms out at some point, right? You can see that we had 5 waves up from the beginning, the 80s all the way to 2006. Now we have the 3 waves down. This is the way markets work. It's kind of interesting, but also it takes a long time for a lot of these things to play out. If we look at just the first leg of this move down from 2006 to the low, which is roughly right down here, it's about a 95% drop from where it was. And that high was almost touched back here in June of 2022. So I think that there's a good chance that if this does play out, we could be seeing a very similar bottom to where we did back in 2008, 2009. I mean, that could bring us roughly around $2 a share, $2.50 a share for Bank of America. Again, it would have to play out that way, but I think that a lot of the unrealized losses compared to the unrealized gains that they had, which was very few, there's a good chance that they could definitely capitulate in a way where I don't think they'll go out of business, but I definitely think that their share price will definitely hurt significantly. And the other thing I didn't mention earlier was that they do have $474 billion in mortgage-backed securities that are to be held to maturity. And we know that housing market is in a bubble just as much as everything else is. So that's going to be really interesting to see how that plays out. But I think that this is still in play. I have my shorts, my outlook is around 8 to 9 months to see if it hits some of those, but I'm keeping an eye on if it loses this level of support here, which we've bounced off of quite a few times back in 2016, back in 2020. Looks like we're about to hit it in 2023. It would be losing the 50 moving average, the 200 moving average, and we'd be testing this to see if this holds. And if it doesn't hold, well, then there's a good chance that we're going to be coming down to maybe $17, $18, $10. And if the crash is bad as we anticipated, or at least I anticipated it to be, then I think somewhere in the $2 range is very possible for Bank of America. So it's just something we want to bring up again because they did report earnings, and you're going to have to keep an eye on this blue line here, which would probably be tested somewhere around $25 to see if that holds or not in the coming days or coming weeks. Let's see what else we got here.
We can look at
Let's look at some of the.
If you want to make me throw up on the screen, we can look at Nvidia real quick.
Yeah, I remember you sent out a tweet a few days ago and responded to me when I said that that gap down there had to be filled. It might get filled, guys, but it's pretty bloody out here, right? So this is Nvidia. Obviously, it had a pretty nasty wick down. It's actually bounced up pretty well from where from a wick all the way down to. You can see that it went down to 424. It's currently at 440. So people are buying it back a little bit. You can see that it is getting close to the oversold on the daily. We did know this was going to happen though, right? We got a parallel channel that's right here. It's going to break down from it. And look how many green days it had in a row. And let's be honest here. Fuck, I just noticed a head and shoulders pattern right here. Left shoulder, head, right shoulder. That gap's probably going to get filled at some point. I won't give a time horizon, but it's definitely going to hurt the price of Nvidia. I think this is probably going to see some more negative price action. It could consolidate a little bit here. I think it's going to fill out this right shoulder before we start to move down. But yeah, this is not down 4.6%. It's a pretty good move down for the day. But I think that even if we get to,
so I don't need you, I don't need you out here spreading this disinformation about the price that it's going to go down to, Kevin. All right. We've had a rough enough day as is.
Dude, I'm shorting my fucking bank. I know it's going to get bad. All right. I need to hedge everything. All I'm listening to nonstop is Nirvana, the man who sold the world. That is me. I'm just kidding. But here we are.
And Jim Carrey here from I'm kicking my own ass. That's Kevin shorting his own bank right now.
Yeah, I mean, I got to get a new bank, but I'm waiting to see who survives it at this point, just to have, a backup plan sometimes. Good to have backup plans. But yeah, we lost the 50 moving average on the daily. So I do think that we're going to probably come test the 200. Maybe the 200 fall comes up a little bit closer to this, and we don't have to dip down as low as I'm anticipating. But this massive gap here, which was, Memorial Day, the weekend before Memorial Day, where it just shot up like insane. I mean, it was up like 75% or something like that one day, or $75 one day. It was, that's going to get filled. I think that's, yeah.
No, it's not. Don't you put this out into the universe, Kevin.
I'm going to fill it.
You son of a bitch.
But let's just see what the percentage would be for if it did drop to that point, right? Top end of that, 16%. The median of that, or the middle of that, 21%. And the bottom of that would probably be 27%. Do I think that it's going to go that low? No, I think it could go lower. I hate to say it, but there's a lot of gaps down here.
Fuck up.
I should just mute myself as I explain this. That way everyone's happy. But it's something that we have to keep an eye on, because everyone bet on Nvidia and the other 6 stocks of the apocalypse. But if these start to hurt, do you think that the other ones that have pretty much barely held up to this point in this market are going to be doing okay? No, this is like Bitcoin dominance at this point, right? If most of the market caps in those top 7, if they start to lose, then guess what? Everything else is probably going to lose with it. So that's just kind of the mentality you have to have going in with this. But those are my levels, where it's possible. I don't think it's going to happen instantly, but I think that it is possible in the coming weeks to months that we could start to see the price trend down in that direction. A lot of people are betting on tech earnings going into the next few weeks. I don't know. I think there might be something that definitely influences the price and market sentiment more importantly than some of these earnings. And again, I don't think the earnings are great. If they beat expectations, the numbers still suck on a lot of these companies that are reporting. A lot of them are missing expectations, even significantly in some of the smaller companies. So that's Nvidia. Let's take a look at TradFi before we go into crypto. And with crypto, we can roll through it real quick.
Oh, we're getting some red on crypto right now.
ETH, are we?
Bearish engulfing candle has just been completed on ETH for wiping out yesterday's gains.
Damn. I said this last week. I think that this is going to be a very boring week. I think that because of the options expiring, you're not going to see the price move up or down too much. I think it would be more up than it is going to be down. I think that once we get Biden back from Israel, if he does go, I think Putin, when he gets back from Beijing, I think a lot of the stuff that's going on in the world is kind of holding stuff off till we get some type of clarity what's going on. I think that's going to really keep the markets elevated at this point. I don't think it's going to collapse before Powell speaks this week. Let's put it that way. But I would be anticipating end of this month, if you're going to see any type of red candles that are significant, that's what we're going to keep an eye on. But I think that right here, what we're seeing, just very similar to Bitcoin, is price pushing up a little bit, people getting out of their positions. I mean, we're going to get a death cross on the Dow if it dips below this 200 EMA again, and we're completely overbought. So keep an eye on that. This range. Level of resistance is at 34,347. I don't think we're going to break above that. If we do, it's going to be a quick wick and probably come back down. Again, not financial advice, just what I think the psychology of this market is right now. You know where your resistance lies with the NASDAQ. You keep whacking your head right on this blue line. This is not necessarily a good sign. This is a descending triangle pattern. These tend to break to the downside. We'll keep an eye on how this plays. This could be a bull flag here. Let me see. But I don't necessarily agree with a lot of people that are saying this is a bull flag. right there. We would have to have came down a little bit lower. So I'm sticking with this. This is a descending triangle, and here's the bottom, here's the top, and you keep finding resistance. Eventually, it's going to break to the downside, right? We know where our levels of support are. This yellow line right here at 14,416, or the 200 EMA, and we'll see how that plays out. S&P, we filled that gap. This is a gap that we did fill almost completely. We went all the way up to 14,401. I think that this is a good chance that we could stay in this for a few days, but we're still finding resistance on the 50 moving average. Could come down to test the 200. If we lose that, then obviously sub 42.50 is going to be a key level to lose, and that's going to be something to watch. Dollar still strong, nothing to necessarily be too concerned with. Got a lot of room on the daily to be pushing up here. I think that there's a good chance that we could find support down here once again, and then rally up. Just going to play out. But let's take a look at crypto right now. Let's go to Bitcoin. See, Bitcoin's price is actually still pretty high considering all the fake news that came out. So I think this is just a perfect opportunity for a lot of whales to be exiting the market. I'm not necessarily I kind of see it as that way. I don't think that the price is going to be pushing up for any other reason than other people to be leaving. I saw a lot of money flow onto the exchanges last night. You can also see that Bitcoin dominance is once again above 52, right? We breached the high. We went all the way up to, what was this today? 52.45. We're at 52.10 right now as it sells off a little bit. It's a little bit in the red. But again, as alts sell off and Bitcoin stays relatively, high comparatively to them, you're going to see Bitcoin dominance continue to rise, in my opinion. I think that I'm going to be keeping an eye on Bitcoin filling this gap up here to 57%. And that in turn would just mean that a lot of alts are bleeding out. And again, if we just look at some of the alt dominance, you can see this is XRP's dominance from middle of July to where we are now. It's terrible. We're going to get a death cross on this. We did get a death cross on XRP. You can see it here on the daily. We just got it right there. So just for real time's sake, let's play this. That's going to be a recurring theme, I think, for a lot of alts coming up. But yeah, that's a death cross there. And again, remember how high XRP was a few weeks back or a few months back? Well, here we are now. Bitcoin dominance, again, making it bleed out. BNB dominance continuing to bleed out, even after what happens in the fact that they're, they're U.S. withdrawals. I can't speak. I can't think right now. They're halting U.S. withdrawals. You can't, take out any USD that you had on there. You can only buy crypto and swap it out or send it, withdraw it that way. Terrible. It's not a good sign. Just because their banks are probably not banking them anymore. That's going to be the most important thing to keep an eye on with them. But yeah, here we are with ETH, bearish engulfing candle. Could this go lower? Sure, absolutely. I think it's going to go lower if Bitcoin dominance continues to rise, because that is just going to be negative for alts. And I think that ETH is relatively unstable at this level. I think a lot of people aren't necessarily banking on ETH as much as they were, a year ago, 2 years ago. I also think that people are feeling that Bitcoin is, probably the most secure asset, because we're starting to see that one move more than the others. And that's kind of a tricky place to be, because if you start moving your money into Bitcoin, well, then what happens if this was all a fake out and this has been manipulated from the beginning because of stable coins? Probably has been. Well, then if we find out that that's been the case, look what happened yesterday when we found out that it was a fake news article. People are going to sell off like crazy. So it's something to keep in mind. And again, when you have credit tightening and liquidity becoming an issue, and you see that people are leveraging more on their credit cards and things are going up, people are going to take whatever they can because they're afraid that it's going to go down more. And I think that's going to be a very similar mindset for a lot of people. So when I look at ETH right here, finding rejection on the 50 moving average, and we keep going down, we got the death cross on it, back in August. I think that 1463 is not too far off from us. Again, always remember that it's very possible anything can happen in this market, and it could just shoot up to the 200 EMA, wipe out a ton of short liquidations. But I think that this eventually is going to be something where we're trending down to 1465 and then eventually 1338, which are extremely overdue. And you can see over here, that's a market maker pattern that shot this thing up significantly. So we're in a very, very fragile state for the crypto market. I am not necessarily bullish. I'm kind of staying away from it for the time being, but that's what I'm seeing. BNB obviously bleeding a little bit here because of the news. Whether this decides to shoot up or not, I don't care. I think that we're going to have to test lower, as liquidations are for a lot of people who are longing it up here, actually a lot lower. They're around $200 to $194. So we'll see if that range even gets tapped up to Binance, whether they want to sell or not. So that's where I think crypto stands right now. Nothing too crazy. Alts look fucked. Bitcoin looks like the dominance is going to continue to rise. What else is new? This is October, baby.
Welcome to October. All right, that's going to do it for today. We'll be back tomorrow, discuss any news in the markets, the Tesla and Netflix earnings, anything else that Kevin has on his mind. We'll get into there as well. So keep an eye out for our tweets with the start time tomorrow. Haven't nailed it down quite yet if we want to be live for when those earnings come out. But if you have not yet, do us a favor, like, subscribe to the channel, share us out on social media, drop some comments. All of those things help us out a ton. We appreciate our newest subscribers. We hope that we can do a good job for you and maybe provide a little bit of entertainment here and there. So have a great day, everybody. Stay safe out in the markets, and we will see you next time.
Take care.